Hey everyone, hope you're having an amazing day today. This is Chaz. I'm a commercial broker here in Newport Beach, California. I just want to give you a quick update on what's happening in the multifamily market. It's actually one of the brighter spots in the commercial real estate market. It's been heating up. So in the Los Angeles region, we had 209 multifamily transactions in July versus 127 in July of last year. Year to date, there have been 1,229 versus 869 last year, so significant jump in transaction volume. And again, this spans, this is general information out of CoStar, so it covers anything that's over 5 units. So some of these are smaller, obviously, not the larger institutional level. There's fewer of those transactions. And they've been trading at about a 5 cap on average, and $354,000 per unit. In Orange County, there were 38 transactions in July versus 15 in July of last year. And year to date, there have been 198 transactions versus 99 last year, so doubled. And those traded on average at around a 4.5 cap, which is quite low, especially with the current debt markets and what the lending looks like. The average price per unit is $441,000 in those transactions. In the Inland Empire, there were 19 multifamily transactions in July versus 11 in July of last year. And year to date, 133 versus 81 this time last year. So significant uptick in transaction volumes in that market as well. Averaging a 5.3 cap. And trading at $270,000 a unit. And in San Diego, there have been 58 transactions in July versus 32 in July of last year. Year to date, there have been 271 transactions versus 185 of last year. So again, a significant increase in the number of transactions across markets year to date versus year to date last year. And in San Diego, the average cap rate was about a 4.7, and they traded at $400,000 a unit. So we've been seeing this for San Diego in particular has been heating up in the multifamily market, just very competitive in the pricing, and it's pushing cap rates lower. And but you're starting to see strength, and I think it's going to be very interesting as we look, and we think that the debt markets are going to start seeing lowering of interest rates over the next year. And that's really going to start driving activity as well in this space.